Paul Hickey, the amount of records, I've lost count. The S&P 500, the Dow, you guys do the counting. Walk me through it and whether it's actually relevant or not.
No, I don't think, it's just significant of a very strong trend in the market. We've heard all year long in the beginning of the year that it was these FANG stocks driving the market, and that was that was a big red flag for the market because it was so few stocks driving the market higher. The truth was, breadth has been very strong, hitting new highs throughout this rally. Then the FANG stocks corrected a little bit, market kept going higher, and then people are thinking, well, this FANG stocks, that's a sign of problems to come. So all this, the overriding trend is the market is innocent until proven guilty. We've seen breadth confirm things, and we're not seeing major divergences in any of the key indicators that we follow.
Isabelle, do you see the same strength that Paul sees?
Yeah, absolutely. And I think, what we just heard from the ECB is a confirmation that we're in this slower for longer environment. I mean, it's true, maybe we're beginning to see the light at the end of the tunnel and to have confidence that inflation will return at some point. But central banks are going to be very cautious. Interest rates are going to remain low. And that's very supportive of equities around the globe, I would say, particularly in Europe, but definitely in the US as well.
Paul, what's interesting, though, in the middle of earnings season is when I talk about the sentiment living up, right, is that you have to find undervalued stocks, but stocks that are actually going to have growth. And so if you take a look at energy, I feel like that doesn't really fit the bill. I mean, they've gotten really pummeled so far, right? But that's the value play.
Yeah, so energy is an interesting situation heading into earnings season. So this chart here, we have the energy stocks hitting new 52-week net percentage hitting 52-week highs. So when it's negative, you're looking at 52-week lows. So as the energy sector has declined, we saw about 40% of stocks in this sector on a single day hit a new 52-week low. But in the next leg lower that we saw towards, just in the last couple of weeks, it was down to about 20%. So when you start to see that narrowing of the decline, it's a positive divergence. That and high yield spreads didn't make a new high in the energy sector. That's a positive divergence. And sentiment coming into earnings season has just been absolutely abysmal.